Hi, my name is Alicia Butera, a financial planner here at Planning Within Reach, and today I'm going to review how to use our cash flow system, a way to track your monthly expenses. At Planning Within Reach, we've created our cash flow system to keep our clients and readers on track and give them an easy to use and straightforward solution to track their spending. Since we always ask our clients for their expenses, we created this Excel system as an option to do so. You'll want to start by downloading the Excel found in our downloads page, which I will link below. This is our Excel system. You'll see there's 4 tabs at the bottom, the first being Start Here, which does go over some directions on how to use the Excel, which I will also discuss on this video. I'm going to start in step 1, which is create a spending plan. And the goal of step 1 is to analyze your current income and expenses to create a budget you can stick with. This starts with knowing your actual current spending, and if there's areas you can cut or areas you'd like to spend more in, we'll adjust them here to create your new monthly budget, which will later in step 3 track monthly to see if we're sticking to. Now on create a spending plan, we're going to be entering income and expenses, how often our expenses occur, our savings, and then we'll be able to analyze at the end if we have a neutral, a surplus, or a deficit in our monthly budget, which you might already know now just based on, how you feel your cash flow is and what your checking account is doing. But we'll also give you some ways to look at spending category goals, which is how much you should be spending in different types of expense categories to see if you are on track and give you a good way to analyze your budget yourself. So I'm going to walk through step 1, which should be pretty self-explanatory. If you've ever created a budget before, it's going to be very similar. We'll start by entering all of our income sources and how often our income sources happen. If you get paid 2 times a month, like on the 1st and the 15th of every month, your frequency will be 24 times annually. But if you only get paid 1 time a year, say a bonus, for example, you'll just put 1 as frequency. Now, expenses multiplied by the frequency will be equal to the total amount. That'll happen for you automatically. Just make sure that total amount is correctly multiplying that income or the expense category by the frequency. What you'll be able to do down the line, especially in expenses, is let's say for mortgage, right now, you are spending $1,200 a month in rent or mortgage expenses, and maybe you're looking to buy a new house and you want to see if you can afford a higher expense amount. You'll be able to change that here in the budget total. Let's say we're going to move from $1,440 to $20,000. You would just type that directly into budget. And as you noticed, budget was always equal to the annual total if you did not change it here. As you go through and enter all your income, expenses, which we do split up between fixed and discretionary, which are described here. We'll also have savings, and then your net income and total expenses will be calculated at the bottom, showing you if you do have a surplus or a shortage, or if you are neutral, which would be 0. Then at the bottom, these are the spending category goals I was discussing before. The goal percentage for your fixed expenses would be 50% of your total income, discretionary expenses at 30% of your total income, and savings at 20% of your total income. If you enter those income expenses, we will calculate the percentage for you. Now, if your fixed expenses are at 70% of your total income in comparison to a 50% goal, that is something to note for the future, that your fixed and non-movable expenses are taking up quite a bit of your total income, probably leaving you much less in discretionary expenses where you're having fun and or savings for the future or other future goals. So analyze your spending categories and budget totals throughout in order to try and get closer to these goals. So that is what you would do in step 1. You can get information like your net income from pay stubs, as well as your fixed and discretionary expenses. You can get those from credit card companies or bank statements. They'll usually give you an annual total for last year if you find an annual statement, and they'll usually break them out for you actually already in categories. I find that to be the easiest way to do it. You can also just look at what you spent last month, if that's what you have on hand, and enter those amounts as associated here. Now, once this entire thing is filled out, what you'll have is the next step, which is creating a flex plan. A flex plan is another way to categorize non-fixed and actual discretionary expenses. These are the areas that most people have trouble keeping to a budget with, and a fixed flex plan is similar to a strategy known as the envelope method. The envelope method is usually when you keep cash in your wallet and in envelopes for different types of expenses. So here we break out flex, obviously, into 4 different categories: F, L, E, and X. And F being fun and entertainment, L being looking good, E being eaten out, and the X being extra shopping or extra expenses. You can utilize the envelope system to break out monthly or weekly withdrawals of cash and utilize the system to pay cash per these F, L, E, and X expense categories. Or you can do this multiple ways. What we really are trying to do here is give you a way to create a budget for total types of categories. That makes it a little bit easier to say, instead of I'm just never going to watch a movie again, we'll say you have a budget for flex expenses of $200 a month. And once you are done with all of your fun and entertainment, maybe it's you get to see 5 movies one month, but you skip golfing, or you have no friends' weddings expenses per month. That's how you decide to spend those $200. You can do it however you want, but once the money is gone per category, you're done spending in that category. You can also use a debit card system. You can transfer money into a debit card, of which you obviously watch every day to make sure you are not going to over withdraw. But you can utilize a debit card system to have a portion of your paycheck sent directly to a checking account, of which you only use that checking account for your flex expenses, and you can manage it that way as well. Look into these types of categories, see if something like that is what you want and what you're looking for. That'll again flow into your creative spending plan. Down here in the flex categories, your numbers will autofill to the below area tile, so do fill out step 2. Even if you might not want to use the flex system, you can utilize the categories here as a way to infiltrate those expenses. Going into step 3, tracking your expenses, you'll see column C is your budget column, and this is going to flow over from step 1 and step 2. So the budget that you created in step 1 from the expenses that you filled out in step 1 and 2 will be here. So everything on step 1, column G, will flow over into step 3, column C. Now what we are doing for the rest of step 3 is that each month we'd want you to fill out, again, your income and your expenses, what actually happened in January, what you actually earned and what you actually spent, and be able to track that now monthly. So the hardest part is setting up the system, setting up step 1 and creating all the categories that you need in order to manage this yourself. Some people aren't going to have all of these categories. We tried to create ones that were standard for most people and cover all the bases, but you can always edit these to make them what works for you. You can do larger general categories if that works better. But the goal here is for you to get to track your expenses monthly and kind of come up with your own solution on how you're going to manage your budget. And some people, they just need to do this for a couple months and you learn some good habits. Other people want to do this every month and make sure that they do stay on track if they are planning for a larger expense or they're trying to save for a specific goal. What will happen is once you do track this over the 12 months, we'll be able to give you a 12-month average and a 12-month total for your income and expenses, which is, again, a nice way at the end of the year to look over and say, okay, approximately what was the average that I spent in these specific categories, or what did I spend total? And that, again, gives you another good way to say if you are overspending or underspending in different areas. And we will be showing you at the bottom here your total savings, total expenses, and your surplus every month, and again, average and total annually as well. So that is our cash flow system. Thank you so much for watching. If you do have any questions, you can always reach out to us. Go to our website or email us at hello@planningwithinreach.com. We're happy to answer any of your questions. Again, my name is Alicia Butera, a financial planner and CFP here at Planning Within Reach. Thanks for watching.